Assalamualaikum. Good morning, everyone. Live from BNB Securities. Today is the day that we are going to hold the BNB Securities Virtual Corporate Day. Technology sector presenting a GHL system. Um, what you can see in your screen is actually our program itinerary for today. It will begin. Just let me run through with you what will be the itinerary for today. The day will start with the recital of doa by our senior analyst, Encik Azim Faris, and then followed by the opening address by our respected Chief Executive Officer, Encik Kamaruzaman. Followed as usual by our global economy outlook for 2023 by our chief economist Encik Imran, and then followed just a short 10 minutes presentation by our senior analyst Afifa on the technology sector. You see the evolution of technology sector, why we pick GHL system as one of our recommendation for the year. What would be the prospect for them that you're going to hear later. And then this will be followed by 1 hour presentation by the Executive Director and Group CEO, Mr. Sean Hash. He will be speaking about 1 hour and then followed by question and answers. Now, before we
Tapi
move,
malam orang ada meeting dengan
Hanafi,
Abang Zaid punya uncle tu.
before we move
Yang
on, let me brief you slightly on GHL. The company was founded in 1994. They have close to uh, 1,000 employees. They are operating in 6 countries with close to 400 footprints all over ASEAN. Their span reach over 6 countries, as I mentioned, which is Malaysia, Philippines, Thailand, Indonesia, Singapore, and Australia. Now, with the advent of 5G across the region, is actually paved the way for GHL to actually prosper further, given their vast footprint across the region. Now, GHL is the leading payment acquirer in ASEAN for over 100 global and regional payment schemes and channels, processing over 1.5 billion payment transactions per month. Now, the reopening of China in January is actually one of the lighted news that we've so far this year that we think that will have a large spillover effect for GHL system. Now, GHL system market capitalization is about 1 billion. The share price has rebounded slightly, currently trading about 95 cents compared to their 52-week low of 66 cents. We think that it could actually reach close to their 52-week high of 175. Now, as I mentioned, they are actually a provider of transaction payment acquisition. They are involved in card payments, mobile e-wallets, prepaid top-ups, bill collection, online payments, acceptance, SME e-lending, and for shared services is smart all-in-one payment acceptance, sale, rental, maintenance, and also MOPS. For solution services is actually they are proprietary payment solutions, hardware and software for secure payment network access controllers, loyalty platform, loan repayment, online client specific solution. Now, this is a very highly niche player for online services, and we would like to hear more from the executive director, Mr. Hash, later. But before we start our day, let's get the blessing of recital doa that will begin with the doa reading by Encik Azim, our senior analyst, and also our online guest analyst Azim.
Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Ar-Rahmanir-Rahim. Maliki Yawmiddin. Iyaka na'budu wa iyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta alaihim. Ghairil maghdubi alaihim waladdallin. Amin. A'udzu billahi minasy syaithanir rajim. Bismillahirrahmanirrahim. Alhamdulillahi rabbil alamin. والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين. اللهم إنا نسألك لسانا راتبا بذكرك وقلبا مفعوما بشكرك وبدنا حينا لينا بطاعتك. اللهم إنا نسألك إيمانا كاملا ونسألك قلبا خاشعا ونسألك علما نافعا ونسألك يقينا صادقا ونسألك دينا قيما ونسألك العافية من كل بلية ونسألك تمام الغنى عن الناس وهب لنا حقيقة الإيمان بك حتى لا نخاف ولا نرجو غيرك ولا نعبد شيئا سواك واجعل يدك مبسوطة علينا وعلى أهلنا وأولادنا ومن معنا برحمتك ولا تكلنا إلى أنفسنا طرفة عين ولا أقل من ذلك يا نعم المجيب. وصلى الله على سيدنا محمد وعلى آله وصحبه وسلم والحمد لله رب العالمين. آمين يا رب العالمين.
Thank you, Azim, for the recital of doa. Without further ado, let's just move on to the speech, opening speech by our CEO, Encik Kamruzaman Abdullah, and also for him to grace and also officiate the event. Over to you, our CEO, Encik Kamruzaman.
Thank you, Dr. Nani. Can everybody hear me?
Yes, loud and clear.
Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to basically the esteemed speakers, Mr. Solhesh, the Executive Director and CEO of GHL System, and also Mr. Dennis Saw that I can see here. Our valued clients and our working colleagues have made this event happen. Alhamdulillah, it is our pleasure to welcome you to our second corporate day this year from the series of the 8 corporate days planned for the year. And today we are bringing to you the GHL system. As we all know, we have been adopting the lifestyle of paying online digital payments, and we can't move anywhere without our smartphones. And we are so used to not bring any more cash nowadays. But of course, despite all this convenience, there will be challenges faced by the providers of these services. So it's good for us to hear from the GHL system who has been providing this system and to listen to what are the challenges, what are the cyber threats, what are the things that we should and we shouldn't do, and especially the challenges within the industry. As we all know that basically today we saw that MIG has there's a limit on MIG today. So how challenging the industry can be and how competitive it can be. So please feel free to ask questions, and I think our analysts will be sharing with you also about the technology sector. And this is for the knowledge of all of us in order to assist us in decision making in our investment decision. And we are happy again to basically present to you, and we hope that this series of corporate days will be beneficial to you in assisting you with our decision making. Have a good day, and hope you'll be able to reap a lot of benefit from this event. Assalamualaikum warahmatullahi wabarakatuh, and thank you.
Thank you, our CEO, Encik Kamruzaman, for the opening speech. We appreciate him gracing the event for us. Okay, without further ado, let's call Encik Imran, our Chief Economist of BIMB Securities, to give his view on what he thinks is going to be for the economic and local economy for 2023. Imran?
Okay, thank you, Dr. Rosnani. Let me share. Okay.
While, okay, is it up, Imran?
I think, can you all see?
Not yet. While Imran is uploading his slides, just to recap, China surprisingly, reopened their economy in January. so that would actually pave the way for their sizable number of tourists to come to go outbound into ASEAN region. So hence our bullish prospect for GHL system.
share.
So
Ada tak?
Imran will be able to give what he thinks is going to be the headwinds, the prospects, and the challenges for the global economy in 2023. So we are very, we are very encouraged by the
Ada?
reopening of China, and Imran will be able to give you more
Okay,
insight on this. Okay, Imran, over to you.
Okay, sorry for the delay. Okay, on the global economy, last year was a plentiful turbulence, and the ride has been very bumpy, with the world economy already hurdled by the supply chains, the disruption, induced inflation, tight labor market conditions, revived consumer demand from the excessive fiscal stimulus, and also authorities' monetary policy. And the Russia's aggression in the Ukraine added sharply to the commodity, energy, food, and industrial material prices. So this basically pushed the world economy to the risk of stagflation, and the impact of COVID-19 pandemic was also still lingering last year. And as we move into 2023, the predicament of continued fight against inflation and thrust towards economic growth is likely irresolvable in the near term. So the global fight against inflation, Russia's war in Ukraine, and also a resurgence of COVID-19 in China weighed on the global activity in 2022. And the first two factors will continue to do so in the 2023. And hence, the global economy is poised to slow this year before rebounding next year. But despite these headwinds, the outlook is less gloomy and could represent a turning point with growth bottoming and inflation declining. We've seen the economic growth prove surprisingly resilient in the third quarter of last year, with strong labor market, robust household consumption, and business investment, and better than expected adaptation to the energy crisis in Europe. Inflation showed improvement, with several overall measures now decreasing in most countries, even if core inflation, which excludes more volatile energy and food prices, has yet to peak in many inflation. However, in the fourth quarter, this uptick is estimated to have faded in most, though not all, major economies. And as well, China's sudden reopening paved the way for rapid rebound in economic activity, and global economic conditions have improved as inflation pressures started to abate. This and a weakening of the US dollar from its November high provided some modest relief to emerging and developing countries. And in the latest economic outlook by the International Monetary Fund, where it has made a slight increase to its global growth outlook for 2023 due to what they call a surprising resilient demand in the US and Europe, easing energy costs, and the reopening of the China's economy after Beijing abandoned strict COVID-19 restriction. The IMF still see the pace of global growth falling this year compared to 2022, but by a smaller margin than it had predicted in October. The IMF is now forecasting about 2.9% growth for 2023, up from 2.7% forecast in October, as compared to 3.4% in 2022. And overall, the economic outlook is set to be weaker in 2023, with the main driving force being the aggressive pace of monetary policy tightening led by the US Fed and also other major central banks to tame the multi-decade high inflation. And however, we do not expect a severe recession due to the absence of financial imbalance. Next. Okay. We mentioned about global inflation trend, and this year what started as the supply disruption and also cost-driven inflation pressures have broadened to other goods and services. And a look at the data, however, suggests that global inflation had already peaked in 2022 after hitting the highest level in 4 decades. Prices of fuel and non-fuel commodities have declined, lowering headline inflation, notably in the US and the Euro area. But core inflation has not yet peaked in most economies and remain well above pre-pandemic levels, and it has persisted amid second-round effects from the earlier cost shocks and tight labour market robust wage growth as consumer demand has remained resilient. Medium-term inflation expectation generally remain anchored, but some gauges are up, and the IMF in their latest World Economic Outlook said that global inflation is set to fall from 8.8% in 2022 to 6.6% in 2023 and 4.3% in 2024, which are still above the pre-pandemic levels of about 3.5%. And as we have seen, US inflation already peaked at 9.1%, where in June, and now it has gone down to 6.5% in December. Similarly, in Europe also, the CPI has slowed to 9.2% in December, the lowest in 4 months. So, with the commodity energy prices cooling off from their peak, the supply disruptions and labour market pressure subsiding, and combined with the effects of global central bank interest rate hikes to cool off demand, global inflation rates likely will cool throughout the year, but the cool down period will be long and slow. And next, okay, the central banks have been tightening the interest rate last year, and they soon resolve to bring down inflation as well as anchor inflation expectations. And with inflation likely to remain high for some time despite global energy and food prices softening in recent months, and a sharp easing in supply chain pressures in consumer goods market, a pivot back towards an interest rate cut is unlikely in 2023. But rather, the quantum of interest rate hikes will be smaller compared to steep hikes in the beginning of the rate tightening cycle. And global policy rates are set to climb this year as central bank persists with monetary tightening, but central banks are likely to nearing their peak in rates. And the silver lining is that inflation is expected to come down significantly, and therefore, I think although global central banks continue along their rate hike path, but the pace could be slower. As we can see in the chart, in the table, we saw that early this month, the US Central Bank has slowed the pace of interest rate rise and says that there will be ongoing increases as it continues to battle inflation. The Fed increased the interest rate by 25 basis points on the 1st of February, taking it to a range of 4.5 to 4.75%. This follows the 6 larger rises in a row, including 4 consecutive 75 basis point hikes stretching back to June 2022. And the Fed chair says that while inflation has begun to slow, he expect a couple more rate hikes in the months ahead, and does not see the Fed cutting rates this year. And we also saw early this month the ECB, the European Central Bank, raise interest rate by 50 basis point to 3%, and at the same time pushing the borrowing cost to the highest level since late 2008. But the ECB signaled at least one more hike of the same magnitude next month. And BOE, Bank of England, also had a meeting last week, and they also raised the interest rate for the 10th time in a row, but it dropped its pledge to keep increasing them forcefully, saying that inflation has probably peaked. The BOE rate now stands at 4%, the highest also since 2008. And I think the BOE will continue with their rate hikes, and they will have a look at how it will impact the economy, and as the central bank trying to put the brakes on the inflation. Okay, on the currency market, basically next, we saw that the FX in the US dollar streamrolled every other currency last year, as we can see in the chart on the left, where all global currencies had weakened in 2022 against the USD. This because of widening interest rate differential, safe haven flows, and also an absence of the attractive alternative. However, the US dollar since November last year had weakened slightly, and if you look at on the right side, year to date, almost all currencies had strengthened against the US dollar, and I think although the wave of the USD strength could persist early on, but I think perhaps it will reverse later this year, and the big US dollar will form the cornerstone for currencies to strengthen against the US dollar through 2023 as the upward slant on US interest rate abates and also global inflation moderates. So if we move into 2023, there's the risk there's virtually no place to hide and across the region, and the global economy face an array of challenges to growth. The economic challenges that dominated in 2022, such as elevated inflation, tightening financial conditions, energy disruptions, weakening growth in China would not vanish overnight. So overall, the risk to the outlook remain tilted to the downside. And even if adverse risks have moderated since October and some positive factors have gained in relevance. So overall, on the downside, we're looking at about 4 issues that on the downside risk. Firstly, on the China, because I think China's recovery could stall amid greater than expected economic disruptions from current or future wave of COVID-19 infections or a sharper than expected slowdown in the property sectors. Inflation risk, inflation could remain stubbornly high and continued labour market tightness and growing wage pressure, requiring tighter monetary policies and resulting sharp slowdown in activity. And geopolitical risks such as escalation of the war in Ukraine, which will remain a major threat to global stability that could destabilize energy or food markets and further fragment the global economy. And COVID-19, although it no longer exerts a significant impact, but the big risk is that if a more contagious COVID strain emerges, which is not effectively checked by vaccines, that will dampen the economic growth as well. So I think to conclude, basically, it's going to be a tough year from the perspective of global growth, which I think tougher than 2022. But I think if you look at the what we have seen since third quarter of last year, we know that 2022 we see the lower growth, but 2023 we expect lower growth in cost compared to 2022. But we project that this would turn around towards the end of 2023 and into 2024. And as the economy improve, I think we will not be going to see any downgrade of forecast as what we've seen in the 2022. So, but this, I think, of course, subject to unexpected negative surprise. On the domestic economy, we project 2023 GDP growth of 4.5% from 2022 estimate of 8.2%. This will be driven by full turnaround in services and mining sectors and other key growth determinants such as manufacturing. Private consumption also will reach full impact following economy that was fully open in April 2022. Inflation we expect to reach about 3.4%, And on the interest rate OPR, basically, we saw that OPR, Bank Negara decided to pause on its rate hike cycle in January, leaving the OPR unchanged at 2.75%. I think that was the first rate pause after 4 back-to-back interest rate hikes of 25 basis points each in 2022. But Bank Negara signaled that the scope for another rate hike down the road is they are not closing the opportunity to high interest rate if the need arise. And I think at this stage we see a bias for more tightening ahead and expect at least 2 more 25 basis rate hike this year, which could take the OPR to 3.75%. But the decision will be subjected to the stability of economic growth, the pace of price increases, and further improvement in macroeconomic conditions. And I think for this month, we will see some important dates which will be coming in for, by end of this month, the 24th of February, we see retabling of the budget 2023, and most probably we will also see some revisions to the economic forecast for 2023. And this Friday we'll be looking at fourth quarter 22 GDP, and I think that's be given that we expect GDP to grow by above 8% in 2022. So what we are looking forward is how the data in the fourth quarter will look like, and how the budget for 2023 and how the government forecast the economy for 2023 by end of this month. So I think this month will be a very important month for the country, and we're looking forward how the economic data will be like by end of this month. Hopefully, we see a much improved economic conditions after China reopening, where I think we will see a lot of tourists from China, which will push the domestic tourism as well as consumption. So I think that's why we believe that GDP will grow quite strong by 4.5% this year. I think that's conclude my presentation. Thank you.
Thank you, Encik Imran, for that lengthy explanation on what could we expect this year. Now, again, though the global economy could be actually skirting recession, however, we think that technology sector will remain solid. One, because of the complete migration from 4G to 5G will be completed in 2024-2025. Now, we all know that 5G is actually catering for big data consumption. So that's why this actually underpin our interest to actually rope in GHL system on the prospect of the data payment to their financials. So, but before we pass the line, we pass the mic to Mr. Hash. We would like to call upon Afifah, which is our senior analyst for technology sector, to give her view on what she thinks. Just briefly, just a few slides on the technology sector. What should we expect this year and also next year, the advent of 5G and whatnot. Okay, Afifah, over to you.
Hi, Assalamualaikum and a very good morning, everyone. I hope you can hear my voice. Can you hear me?
Yes, loud and clear.
Okay.
Sure.
Okay, first and foremost, I would like to apologize because of my voice condition, and I hope you guys can hear me clearly. I'm sorry, I'm so sorry about my voice condition. All right, okay, let's move. Okay, first of all, okay, before we go into our technology outlook for 2023 and ahead, right? So let's go and flash back to what happened back in 2020 when we hit with the COVID-19 pandemic, and we everyone of to the global lockdown, right? So during this time, we can see the boom in the cashless payment, because everyone want to stop the spreading of the COVID-19 through the banknotes. And I still remember that there are several banks that are sanitized their concern of the spreading of the virus itself. And during this time also, people have to work remotely at home, even the online study, and we all do go into the e-commerce, online shopping, even we buy groceries through online platform, right? So during this time, we can see how the technology actually become the enabler. Everyone buy PCs, laptops, smartwatch, peripherals, everything to ensure that we can do every our daily activities just like normal. To the COVID, have speeded the adoption of digital technologies by several years. So for the COVID-19, we can see the strong demand for the PC, laptops, etc. So this has resulted into the global supply chain bottleneck, because when the ports of congestion, you can see the port congestion because of no employees work there, and some even some automotive companies, they stop their orders. But then the demand seems better during this time because of the tax incentive the government gave, so that the economy is as normal, right? Okay, so when we thought everything going to be better back in 2022, in the early 2022, there we can see the China zero COVID policies actually make a toll to our to the economy itself. Not only because of that, because of the geopolitical, the Russia Ukraine war, some Fed interest rate hikes, they have resulted to So when we look at the global semiconductor sales, it actually fell for the fourth consecutive month in November 2022 to 45.5 billion US dollar, because during this time they closed the factories, workers cannot go to the factories, and low utilization rates. So this has worsened the supply chain bottleneck. And for your information, the Chinese market actually represent around 30% of the global semiconductor sales. So this gave a huge impact towards the economy as well as the global semiconductor sales. So here we can see how the KL Nasdaq index, we can see the relationship is quite parallel, direct relationship with between the Caltech and Nasdaq. So we can see back in March 2020 when the global lockdown took place, we can see the index fell, and however back in May 2020, we can see the surge in demand for electronics and semiconductor products globally as technology become the enabler for day-to-day activity. Actually, make the index perform well and at peak. However, because of the Russian-Ukraine war started in 24th February 2022, we can started to see that the index perform already fell. There are a series of events like the Fed's aggressive rate hike, as well as China's zero COVID policy has already took the toll to this index performance. Okay, all right. However, I would like to highlight that even though the Fed's aggressive rate hikes, we see that this is quite unfair to the technology companies in Malaysia um because of their strong balance sheet, healthy balance sheet, a low to zero borrowing. That actually it's not fair for them to be penalized as well, because their earnings not much impact, and or I can say that it's give the minimal impact towards the earnings performance for these companies, for the Malaysian companies, especially for the tech sector. So we see that China reopened its borders on 8 January 2023 to give a better prospects to the company, especially to the tech, so that especially for the tech, JSL as well, and other semiconductor companies, because they can run at a higher utilization rate. So all in all, we have an overweight call on the technology sectors, where we believe the key driver is going to be the China economy reopening. So this will increase the tourist arrivals from China. This is positive for e-wallet, volume transaction, as well as besides that, we also believe that aggressive adoption of 5G network globally will give better 5G smartphone sales. This also will give a better prospect for the IoT, AI, AR, autonomous vehicles, data center. Besides, we also believe that EVs will have a positive impacts. Besides, last but not least, the government support, ongoing government support for digitalization through the Malaysia budget, Jendela, My Digital Blueprint of Malaysia Plan is going to be a positive news ahead for the technology companies in Malaysia. So here's the table below. You can see this is our GNE related sector, where you can see here that we have a buy call for GHL with our target price RM1.15. So yeah, I don't want to take much time, so that's all for my presentation. Yeah, over to you, Dr. Nani.
Thank you, Afifa. Note that GHS system is currently trading at about 95 cents compared to our fair value of 115. I think it can easily meet or even surpass given the 52-week high of GHS system price of about about 175. So I think in no time GHS system can soar, exceeding our target price. Now, before I pass the mic to Mr. Hash, Mr. Son Hash, let me brief you slightly on, briefly on Mr. Hash. Mr. Hash is a US citizen. He has over 30 years experience in digital related services. He started his his job as his career at the Wells Fargo Bank in 1989. If you minus that 2023, you get over 30 years of correctly 34 years of experience. And then he returns back. After that, he moved out. He before joining First Data Corporation for about 7 years as a senior management. And before returning to Wells Fargo Merchant Services as CEO, he joined Citibank in 2010 as a regional head of merchant acquiring. He joined GHS System in January 2021, making him close 2 years with GHS System. Yeah, GHS System. So he's now, all in all, he has over 30 years of experience. Let's hear from the man himself and what he thinks is going to be with the boom of e-commerce, with the boom of e-payment, with the advent of 5G, not only regionally but globally, with over 400 contact points for their payment system. I think this is going to grow even more in this year and next year with the full takeoff of 5G. Now we are even talking about 6G in some regions. So Mr. Hash, if you are ready on the other side, we pass the mic to you before we open the floor after 1 hour of his presentation for for burning question from the floor. Mr. Hash, are you ready?
I am. Thanks, Rosanna. Appreciate
Yes,
the kind
yes,
introduction. Thank you very much.
yes, sir. You can take over the mic. Over to you.
Thank you. I'll make a couple of opening remarks. I'll ask my colleague and head of investor relations, Dennis Sao, to then present our deck and our company's position, and then we'll open it up for questions and answers. So very interesting, I think, as Afifa, you were presenting what you were saying with regards to end of COVID, China's reopening, impact of inflationary and recessionary drivers, government supports on digitization. That all plays very, very much aligned with our view and our sort of view of the ASEAN region, which we're very strong in. So GHL System has presence in 4 key markets in ASEAN, and those are Malaysia, Thailand, Philippines, and Indonesia. And we have seen obviously a huge relief after the COVID restrictions were ended. We're seeing a huge demand in consumer demand for goods. Therefore, we're seeing return of consumers to offline shops, meaning brick and mortar shops, and they continue to shop online at the same time. We're seeing them returning to restaurants where we're very strong, and we're seeing high sort of untapped demand for retail spend as well as for T&E expenditure. China opening, we as a company that processes transactions, we benefit from all and any network transactions, CUP, China UnionPay transactions, which are, or UnionPay international transactions, which are very important in our 4 dominant markets, are returning very strongly since the beginning of the year. In one of our markets, I can share with you, we have literally doubled our CUP UnionPay volume in 1 month, month over month, and that's absolutely encouraging. We highly depend on the expenditure that the Chinese citizens who are traveling into the region, and for that tourism coming back into the region, that is very critical for us. The impact of inflationary, recessionary forces clearly plays a role in us as consumers tighten their spending habit because of cost of basic goods rising. So when the cost of food is rising, the discretionary income spends sort of reduce, and that does impact us as a company. But we're actually seeing quite a good spend continuing despite the rise in inflation. We're very strong in basic amenities, supermarkets, food retailers, and so forth. So consumers continue to spend in those segments, and that's good news for us. But should the inflationary drivers continue to drive, or if a recession comes in, and unemployment rates go up, clearly that will impact us, and that may push us back in the recovery that we have made since COVID reopening middle of last year. Last but not least, government support for digitization in this region. And I say region because that government push is not just in Malaysia, but it's happening across the region. And it's also happening interregionally between the various markets. So from a payment connectivity point of view, which is critical to us, there are initiatives on Bank Negara sides, Bank Indonesia sides, Bank of Thailand, and also Singapore monetary to essentially make payments interoperable from country to country. So if you happen to have a My Debit card, you can go easily and spend in Singapore and Thailand, and vice versa. You can do transactions using your Singapore debit card, enabled debit cards here in Malaysia, and likewise Malaysia cards in Thailand, and vice versa. So those trends are trends that are, I think, irreversible. They're good for our industry. They're good for consumers, and certainly will help digitize transactions by far more over the coming months. From a GHL standpoint, our sort of must-win battles are quite consistent. We must, as a company, ensure that we are the ubiquitous omni-channel processor of multiple fully integrated payment options. So, and I say multiple, meaning that regardless of what payment type you have, you walk into a store, you must be able to use and be able to pay, whether you're an overseas visitor or you're a domestic consumer. There is a real convergence between payments and SME financing, consumer financing. You're seeing that across the region with the advent of buy now, pay later offerings, and we need again to be able to offer these services at the point of sale, and we must be able to also provide financing to our potentially underserved SMEs that can really benefit from us. To that end, and Dennis will share with you in more detail, I think, some of the initiatives in terms of lending that we have started across Malaysia to take care of our underserved SMEs and provide financing to them. Last but not least, our enemy in the payments world is cash. We don't worry about our other competitors, frankly, because still 70% or more of transactions in the region are cash-based. And you can just see that when you go to the wet market on any given Saturday, Sunday morning, and you'll see people are still trading in cash. And being able to migrate that cash to a cost-effective digital solution, and being able to support as many points of, as many types of payments rather at the point of sale, and making sure that it is, again, high tech, low cost, and easy to use. Because if we want to genuinely become, ubiquitous, the system has to be very easy to use, not just for the Gen Ys and Gen Zs, but also for the older generation who potentially struggles with more of a digital payment. So we're, as a company, are working very hard to try and address all of those areas and making it easy for consumers to adopt digital means. We think 2023 is going to be an exciting year. We're continuing with our push, and we think it will help the economy here and help the consumers here become more and more digital. With that said, I'm going to stop. Dennis asked me to say a few words, but Dennis knows few words with me never stop. So I'm going to become sort of a listener and have Dennis walk us through the presentation. Dennis, over to you, please.
Thanks, Sean. Hi, morning, everyone. I'm going to take you through a very quick overview about GHL. And to do that, I'm actually going to turn off my video while I do the presentation. Yeah, hope you all don't mind. Okay, morning, everyone. If you all can see my slide moving, you will see that we will cover 4 areas today. An overview about the group. What are our main...
Dennis, your slides are not moving. Sorry to interrupt. We're just seeing the cover sheet.
Hang on, yeah. Can you see my slide moving?
Yep, okay. It's working now, Dennis.
All right. Okay. Apologies for that. Today, we are going to cover 4 areas. We are going to have a quick look over what GHL is and our key business pillars. And we'll talk a bit about the opportunities that lie in front of us, not just in Malaysia, but actually in ASEAN. And then we will end with our financials, and I'll let Sean wrap up on our strategy. Okay. So, a quick overview about us. We've been around since the 90s. We actually got listed almost 20 years ago. We expanded regionally into ASEAN in 2006, and we started our current key business division called Merchant Acquiring, called TPA, in 2014. And 10 years has flown by very quickly, and today we are a major player in the key markets that we operate in. Okay. So payment tech has been made available partly because of, as what you guys have been saying, telco proliferation. A lot of things have gone wireless. A lot of payments have gone mobile. So we have actually adopted and changed accordingly, and we are able to actually go into a lot of new areas. Okay, I'll cover this later. Now, going back to the basics, we are very much an ASEAN-centric player. We are not just in Malaysia. Our philosophy is to basically help merchants as well as users, as what Sean mentioned, to make it easy to be able to transact cashless. Okay, so our modus operandi, if you like, is not determined only by whether it's online or offline, cards, QR, you want to waive. We actually offer the entire suite of payment acceptance. Okay, so that's where, because we know different people, whether you are local consumers or tourists or business people, everybody has a slightly different way of transacting. Okay, and we offer the entire breadth of payment acceptance. Okay, I won't dwell on this too much. You guys can have a look at it later. Now, this is our snapshot of us. Today, we are managing approximately 400,000 what we call payment touchpoints in ASEAN. In the last 12 months, we have processed approximately 26 billion ringgit worth of goods and services. we should be announcing our FY22 numbers in a couple of weeks' time. We are holding our margins around 35%. This has been down, has been a little bit of financial pressures due to COVID. But we are very much net cash. We are very, very strong. And we continue to be able to wait and see what are the opportunities that lies in front of us in terms of M&As or breaking into a new business segment and stuff like that. So today we are approximately 1 billion market cap. I think we are off our lows, but we are also off our highs significantly, okay, due to the disruptions that happened last year, due to the global uncertainties and inflation rates. Okay, I just wanted to draw your attention to a few of our key attributes. One of the key things you will see from us is the fact that our TPV, which stands for transaction payment value growth, is consistent. So over the last 5-6 years, we have been growing our TPV strongly. And despite COVID, we are also still growing our TPV. That means we are actually processing more and more transactions cashless. We have also been growing our footprint. And over the next few slides, I will share all these key features with you. Okay, let's start with our footprint. So today we are primarily in Malaysia, Thailand, and Philippines. Our Indonesia presence is a bit small today and somewhat got temporary curtailed because of COVID. There was no point going in and growing our footprint in Indonesia in the last 3 years because people couldn't come out and engage on the offline side. Okay, but on the online side, we are still processing payments in Indonesia. So today you can see that our payment footprint has been growing quite steadily. As of the third quarter, we are actually up 5% year on year on a third quarter basis. So when you look at our revenue, you will see that what I was saying just now about pre-COVID and where we are during 2020, 21, and 22, we are actually been growing our revenue and our what we call our recurring nature of our business. So being transactional based, we are very lucky in the sense that we are not dependent on people buying lumpy items. Okay, what Sean said just now about us being more of the bread and butter consumption, restaurants, clothing, and stuff like that, you know, has helped to actually maintain and actually grow our revenue as we process more and more payments. So you can see from the charts here, you can see that our revenue has been growing, but there has been a little bit of pressure on the gross margin side because companies were reacting, banks were reacting to the pandemic and were looking for ways to actually reduce costs. Okay. Okay. Let's talk about business pillars. There are actually 3 key divisions to GHL. Our biggest is our TPA, which stands for approximately 2/3 of our business, and shared services and solution services is where we support our bank partners as well as our merchant partners, and this make up the balance 20 to 30% of our revenue. So this is one of our strongest growing drivers of the group, and which you will see shortly as I go through the financials. So a quick one about solution services. This is where we actually help to provide solutions to a lot of banks as well as corporates in terms of actually coming up with proprietary solutions. Okay, a lot of it is actually in the Philippines. In Malaysia, those of you who have heard of Amanah Ikhtiar Malaysia, this was where we actually helped them to go from a complete 100% cash loan collection system to using a debit card solutions. So we have been doing that for the best part of 6-7 years. It's helped AIM manage the cash flows significantly better because they are getting payments immediately as people make the payments, as opposed to when they were doing cash in those days. Okay. In the shared services side, this is where we service most of the major banks in Malaysia, Thailand, and the Philippines with the terminal solutions which they are looking for. So whether they choose to buy or rent or lease or maintain, we have a solution for them. Yeah. So as I mentioned just now, our largest division is called TPA. This is 2/3 of our business. We offer the entire breadth of payment acceptance, whether it is physical cards, QR, mobile payments, online payments, as well as prepaid top-ups and bill collections. So those of you who are familiar with ePay, you would have probably know that you can actually walk into our almost 50,000 physical touch points today, and you're able to actually top up your prepaid mobile as well as to pay your bills. Yeah. So when you look into my TPA acceptance points, you will see that since 2015, we have been growing our footprint significantly and steadily. And even despite during COVID, we have also been a little bit cautious in expanding our footprint, because we do realize that people are unable to go out and spend. But as lockdown is eased, we find that more and more people are going back to the physical space, and therefore we are also doing the same thing. So as of the third quarter, you will see that we actually grew our footprint by about 11% on a group basis to about 180,000 today. Okay, my total footprint is 400,000. The difference between these two numbers is basically the footprint that we manage on behalf of the banks. Yeah. So despite challenging COVID lockdowns, we were able to steadily grow our presence. Okay, this is the key one that I want to share with you guys, our TPV performance. In our third quarter, we processed approximately 6.5 billion ringgit worth of goods and transactions. This is up about 22%. And on an annual basis, over the rolling 4 quarters, we did about 26 billion. So as you can see from here, from pre-COVID, there was a little bit of dip in the second quarter of 2020 as Malaysia went into full lockdown for about 2 months. But since the reopening, you will see that we are actually going up on an uptrend as things are slowly relaxed. You will see that there's a little bit of dips and ups and downs, simply because it coincides with the period when the government tightened or relaxed our lockdown periods. But generally, overall, our TPV is on an uptrend. But if you actually look at my the darker line here, what we call the in-store payments, is actually growing quite stable, quite steadily. A lot of the growth in 2020 was actually provided by our online TPV, which is actually driven by stockbroking companies. Yeah. So when you look at my group TPV, you will see that, as I mentioned, we are generally on an uptrend, and we are very much diversified by way of what drives our TPV. You'll find that the majority of it is actually offline, which is about 70%, and only about 30% is online. Now, those of you who have been following us will know that in 2020-21, when the COVID was in full swing, e-commerce was actually strong. But in 2020, you'll notice that once the lockdowns were relaxed, more and more people actually went back to physical shops and actually spend less online. So this would include ordering in your GrabFood, your Panda, and stuff like that. And this is a phenomenon that is not just Malaysia, but you can see this in places like Amazon, where their numbers are also down because people started going back to the physical shops. So we have online, offline, we have debit, we have credit, and we have e-wallets, which were still hugely dominantly domestic, because at that time we are still seeing some decline cross-border from China still in their zero COVID, not being able to travel. But as Sean mentioned, we have already seen a doubling in January versus December of 2022 from Chinese-based wallets. Okay, so we expect this to improve further, but we will cover e-wallets shortly in a different slide. But on the ePay side, we are also very well diversified between telco top-ups and bill collections. Okay, so if you look at our TPV in terms of ePay as well as payments, it's actually broadly on an uptrend. Okay, and our TPA revenue is actually still growing 15 to 20% year on year in terms of actual ringgit revenue as well as the TPV side. Okay, now in-store, as I mentioned just now, is growing as more and more people actually go to shops. Okay. Okay, you can see that my GP has been sort of like inching down a little bit, but this is more due to the COVID impact. We do expect things to improve as we go further into 2023 and 2024, as globally China has opened up, and we expect more and more transactions to actually come through. Yeah. Okay. I think I saw a question flash on e-wallets just now. You will see that prior to COVID, a lot of our e-wallet volume was actually cross-border. And when I say cross-border, this is primarily from China's Alipay and WeChat Pay and CUP QR, right? So pre-COVID, I think cross-border TPV from China alone was easily above $1 billion. And today, you will see that it's still very, very small. So we have this to actually look forward to when the tourism actually come back in a full bang. Now, what was fortunate for us in terms of e-wallet, capturing e-wallet transaction is the fact that the government of Malaysia and eventually Thailand and the Philippines started to promote the use of e-wallets as a means to combat COVID, right? So in order to get everybody to, in order to avoid people going to the banks and ATMs to withdraw physical cash to spend at shops, the government was actually promoting the use of e-wallets as a means to distribute aid, as well as to help people to go cashless. And we were actually one of the primary beneficiaries of this. So when you look at in 2021, our e-wallet volume was up 35%. Now, obviously, in 2022, this figure was even higher. Okay, and we will announce the numbers after in a couple of weeks' time. Okay, now on the eGHL side, we did about 9 billion in 2021. In 2022, we are actually down overall because the stockbroking segment was actually much lower. But actually, when you look at my third quarter 2022, although broking was down 44%, my non-broking merchants was actually up 20% year on year. So if you actually focus on this darker blue line, you'll see that in terms of transaction volume, you will see that our e-commerce is similarly growing in line with our in-store TPV. Okay. Now, what happened during the broking side is obviously, those of you who remember, there was a big run in terms of glove stocks in the retail segment in 2020 and 2021. But increasingly, it started to reduce in 2021 and 2022 as less and less people sort of invested in the markets because of what was happening globally, and with interest rates being tightened, obviously the equity markets got whacked. Okay, so we actually saw a noticeable drop in terms of TPV from stockbroking merchants. Yeah. Okay, in terms of value-added services, let's talk a little bit more about ePay. You will see that on an ePay basis, since pre-COVID also, we have also been slowly growing our TPV. And today, our TPV is one of the key constituents of overall payment acceptance for us. We have 53,000 physical touchpoints throughout Malaysia, and this is where we can actually help to actually increase digital transactions. Okay, when I say digital transactions, I'm talking about mobile payments, bill payments, online games, e-wallet reloads, and we are present at all these places. Okay, all the major shops. Yeah, chances are, if you have actually gone into any petrol stations, you will see that our ePay name is there. Yeah, so this has been around for 20 years. It continues to grow, despite a lot of people now saying that they are actually doing their top-ups from their online banking portal or from their e-wallets. We are still growing, and one of the reasons we are growing is because some of these e-wallets are actually taking some of these digital products from us. Yeah. So let's talk about the ASEAN opportunity. I won't dwell too much on this. I think most of you are quite familiar. The key thing about us is that the demographics is in our favor. A lot of young people, a lot of digital savvy young consumers, and they are the ones that are driving this move to cashless. On the GDP side, I know 2023 doesn't look as exciting as 2022, but I think 2022 saw the impact of a low base in 2021. So although GDP growth might not be so great for ASEAN, but I think we are still going to outperform the global rate, global GDP growth rates. So with a young population and as economies continue to grow, we expect consumption to continue. Payment infrastructure is actually very, very underdeveloped in Southeast Asia. That's where the opportunities lies for us to actually acquire more merchants. And lastly, regulatory push is one of the key reasons why the government is trying to get more and more people to spend cashless. So those of you who are familiar with our Pink Do It Now QR, and I'm sure a lot of you have used it to pay for your goods and services, there are the equivalent of our Do It Now in Singapore, in Indonesia, in Thailand, as well as in the Philippines. And our central banks have already collaborated and done a G2G, whereby we can actually use our local e-wallets in places like Philippines and Singapore and Thailand to pay for our goods. So next time you go on holiday, if you don't have your Visa card or your MasterCard, you can still use your phone and your e-wallets like your Grab or your Touch and Go or your Boost to actually pay for things, because these are all linked to Do It Now. So these key four drivers are actually one of the key reasons why the outlook for ASEAN consumer going digital and going cashless is actually very, very strong. Yeah, I won't go through this, but I think everybody knows there's a huge market out there. Okay, lastly, I just want to share why GHL has a very, very strong niche, in the sense that our terminals is able to accept and provide not just payment acceptance, but a lot of other form of services, such as like the value-added services like loan payments, as well as BNPL with our BNPL partners. So when you look at this list of payment acceptance, you will know that there are so many different types of payment choices that a consumer can have. That's why merchants work with us. They know that whoever walks through their door, some will be able to find one of these key payment types for them, which suits them, which they use. So this is actually one of our key strengths. Okay, I won't dwell on this. Overall, our revenue was up 21% in our third quarter. GP was up, EBITDA was up, PATMI was up. So from third quarter, we were actually doing quite well. And I think this trend will continue into 2024. Yeah, sorry, 2023. This is just a snapshot of where we were in the last 5 years. You can see that all our markets are actually doing okay, with the exception of maybe Thailand, which actually suffered because of the closure of the tourism market in 2021. But I think in 2022, you will see a recovery in all our key markets as lockdown was eased and people started going back into the marketplace. Yeah. Just a few key takeaways. We remain very resilient in terms of our top line. We continue to grow our revenue. We continue to grow our TPV. Okay. 2022 is growing as evidenced by our third quarter numbers, and margin pressure seems to have stabilized. Okay. But the last thing here is cashless is likely and will continue. It's not likely, it will continue as more and more people swap their cash for their handphones or their cards. Yeah. Okay, maybe I'll hand this back to Sean for him to take you guys through on what to expect in 2023.
Thanks, Dennis. Appreciate it. Guys, going forward, we've got sort of 3 very key areas of focus for the business. I'll start with the first one, which is of great importance to us. As Dennis just walked you guys through, we have been in the TPA business since 2014 or thereabouts, and we started direct acquiring in Malaysia for terminal point of sale direct acquiring sometime in 2019, I believe it was. We have now received our direct acquiring licenses for online and offline, for online in Malaysia and for offline and online in the Philippines and Thailand as well. So becoming our own direct acquirer is of great importance to us, and we were in the final process of settling our network licenses and setting up our platforms for direct acquiring. For the Philippines, this will be completed by the end of March. For Thailand, by the end of June. And as at the ending of that, we will be able to essentially become our own acquirer of record, and we can do so for both offline as well as online acquiring. The next area of focus, and it is probably a much bigger opportunity for us as a company, has to do with lending. I mentioned earlier that we have been doing SME lending. We started in Malaysia on April 15th of last year, and we had a very, very good year. We launched we dispersed 217 loans in Malaysia since launch of our platform, and we now have our licenses in the Philippines and Thailand, and we have taken the time to set up our direct lending platforms as well there. So we will be lending. We've started lending in the Philippines, and we'll shortly start in Thailand. So we think our SME lending will be a big contributor to our growth on a go-forward basis, and we're very excited about this as well. For Malaysia, what we're doing as well is, because we've been lending thus far to our own book of merchants, and the way we've been doing that, you know, we've got SME merchants that we're very familiar with. We see their output on a nightly basis. We see how much volume they process. We've been giving essentially pre-approved loans to these merchants. And what we are going to do is go outside of our own ecosystem and start offering loans to SMEs that are not currently necessarily clients of GHL or want to become a GHL client, but at the same time as setting them up for acquiring, we can set them up for lending. And if they don't want, we can still set them up for a loan and debit the payments, repayments of that loan from their bank account. So we're setting that infrastructure as well, and it'll be ready by sometime Q1 this year. Last but not least, as a technology, as a payment tech company, it is critical for us to continue modernizing our infrastructure. So we are taking putting a lot of effort, I should say, behind that modernization. We're going to be reducing our offline data centers and putting them all on the cloud, and essentially moving away from physical data centers into a cloud-based data center. And we continue to spend a lot of money on cybersecurity, strengthening of our IT networks and systems to make sure that our clients' data remain confidential and are protected at all times. So these are the three key areas of us focusing on this coming year, and even beyond, frankly, because the two, direct acquiring and lending, are not a one-year event. These are products that we'll be selling, and we'll be expanding on those product sets as we move ahead into 2024 and 2025. So those are sort of our three key priorities on a go-forward basis. I think there's a bunch of questions. Dennis, I think this is the very last slide, if I recall correctly, correct? Yep. All right. Why don't I go into some of the questions and try and answer? I'll start from buy now, pay later, and how do you foresee buy now, pay later in the next 5 years, and how is it going to benefit GHL's margins? So it's very interesting. We've got a very strong presence in all the markets we operate in. As a result, all the buy now, pay later providers that want to enter, let's say Malaysia, Philippines, Thailand, they knock on our door and they want to take advantage of our last mile connectivity to the merchants. That last mile connectivity is of huge, huge value to the buy now, pay later providers. So we, of course, sign agreements with those that we feel will bring on good volumes, and we have over time signed with Atome, with Grab, and so forth. And we enable them to access the merchant bases, the merchant base that we have in each of the markets. And for that, on a per transaction basis, we collect a fee. And as that volume increases, of course, we'll be the beneficiary of it, or as it consolidates, we may lose some revenues off of it. But I don't think the impact to us of what we hear in the news in terms of buy now, pay later players suffering or taking losses impacts us, because those losses are absorbed by the buy now, pay later player. We, as a company, as a transaction processing firm, will benefit from the per transaction fee that we collect on the transactions. So that's on buy now, pay later. Would you see some improvement within your gross profit margin moving forward with higher transaction volume coming from cross-border transactions? So we think the margin pressure that Dennis demonstrated in that one slide, I think we've sort of seen the bottom of that, and we've sort of stabilized where we are at about 33, 34 basis points at this point. So we feel quite comfortable that things have stabilized. Will the volumes coming from cross-border transactions help? Yes, they will help us, but also, as we go into direct acquiring, as we go into lending, you will see that our gross profit margins are going to hopefully improve. These are higher margin products that we're entering, so it'll help us overall as a company. Can you guide us the e-wallet volume value?
Hang on, Sean. Can you give us some light on, will there be a regulatory risk on buy now, pay later? Would there be any intervention by the regulator, by the central bank, because this could actually fan inflation in the economy?
So the answer is that possibly yes. As you know, buy now, pay later companies are under review pretty much in every jurisdiction that I know of. And again, you need to keep in mind that we are not the buy now, pay later provider. We are essentially providing the last mile capability connectivity to the merchant. So in that sense, what the regulators do impacts the BNPL providers, not GHL systems.
Can I just add?
because of the last mile, you're not actually the provider, you're just the what do you call, giving services, the connection,
Correct.
not the services itself.
Correct.
Before you go to the flurry of question, can I ask you a few questions? With so many headwinds that we're seeing in the global economy now, the aggressive interest rate tightening, the volatility, the capital inflow, the situation in Russia, Ukraine, all these are actually the headwinds and challenges that you have. Would there be anything that will may affect what do you call the take up on the data or e-commerce or e-payment on that matter? Or are you guys actually insulated for all these what do you call headwinds, given that these are actually the booming trend globally?
So I wouldn't say we're protected. I think I said during my presentation, to the extent that unemployment numbers rise and people are out of jobs, discretionary spending will absolutely be impacted. So if you happen to be going to a restaurant or to a hawker stall for a meal 3 times, 4 times a week, you may cut back on that, and we may get impacted by that cutback. But I think, like Dennis also alluded, we happen to be on many of the basic services. So we're in supermarkets, we're in basic clothing retailers, and not just in luxury discretionary goods retailers and services. So to that extent, we have some level of protection. But if there is a massive slowdown of global economy, which means massive slowdown in Malaysia and Thailand and Philippines, we will indeed be impacted. But we fared very well during COVID, and I think we should be okay in light of the current status of the world economic forecast and situation.
Okay, we have a few a burning question from the floor. Maybe you can pick one or two to enlighten them.
Sure, I'm just going through the list that I see in the chat box. I think this next one, e-wallet volumes and arrival of Chinese tourists. I think Dennis addressed that in his presentation. If you see, our volume without Alipay wallet has grown substantially over the years since COVID has happened. So I think as the Chinese economy opens up, as the tourists from China start getting out, we only expect benefit on top of the growth that we have already had. So to us, that is really, really good news item, and we think that'll benefit all of our markets. And then the one that I'm looking at, the other question, it has to do with Indonesia. It's not as significant due to COVID, and since now COVID has eased, do you plan to revive the market there? So listen, I think Indonesia presents a very challenging situation for us. We don't have the big scale in Indonesia to make a huge dent in the market. We have a team there, but the team is not able to expand beyond Jakarta, which is their main presence. We have been looking at multiple alternatives for our Indonesia business. I can tell you we haven't reached any conclusions, but it is definitely a market we need to try and address better in 2023 and beyond. So we'll continue to look at opportunities there and see whether we can join forces there with somebody or do something a bit different to expand our market share and gain presence and recognition as a force in transaction processing and transaction digitalization. I think I'm done with the questions that I can see, or are there other ones coming through? Let me see. There are other ones. Would you see some improvement within your gross profit margin? I think I addressed that. I believe I've addressed these all. I don't think there's any other ones here. Oh no, maybe there is. There we go. Let's see. what's the most popular type of product that helps the TPA volume stay steady? So, I think with TPA, we have good growth in volumes. It's not about volumes, although it is a volume game as a business. But I think the fact that we will now be focusing on our own direct acquiring business and essentially no longer relying on the buy rates from our bank partners who were previously giving us buy rates, I think this will help us with the gross margin that I was just referring to, and will allow us to capture better margins on these transactions. The cross-border QR payment, when can we expect that to materialize? It is already materialized. We're already able to capture QR code in between, like we, both Dennis and I said, interoperable QR codes between here in Singapore and here in Thailand. It's already up and running, and we're already benefiting from it. If buy now, pay later ever comes under purview of central banks, would that affect JHL Systems? I think I've already addressed that one. I don't know if there are any other questions. Dennis, I don't see anything else. Am I missing something?
Sean, I
else
have
I
a few
addressed?
from me, if you don't mind.
Not at all,
Is there
please.
is there any labor shortage for you for those with technical expertise? Yeah, I think it's everywhere, a shortage everywhere. I'm sure staff pinching is something normal in the industry, but how acute is that? Huh?
So, great question. Is it a shortage? No, but there is definitely a demand out there, and technology as well as other non-technical staff are highly in demand, and they essentially bargain and get what they ask for, frankly, when we go and bring qualified people into the company. So it is challenging, and frankly, we are constantly looking for the greatest and the brightest minds to bring to the company, whether it's technology or on the business side or on the operation side. So yeah, I mean, it does impact us, but it's not to a point where we can't find people. We just have to pay a bit more than we would have paid, let's say, a year or two ago.
Is it something new, or just a late, or only of late that this become a challenge to your company or to the industry per se?
So I've been in this industry, like you said at the beginning of the presentation, about 35 years, and the last 17 years in the Asia Pacific, in Southeast Asia, actually. And I can tell you, I think I'm seeing the impact on the technology side, especially right now, quite drastically. Although I have to believe with the tech sort of restructuring that's happening with the bigger boys, we will see some relief of that, because we're going to see potentially a large number of technologists and even business people that are out there now, because the likes of Amazon and Shopee and Grab and the bigger technology forces are laying off people. So I think some of this may ease a bit, but this has been the worst that I have seen in the 17 years I've been in the region. Although every year salaries go up a bit, but I think finding the right qualified talent was becoming very, very challenging. And now I think we'll see some ease, hopefully.
The movement of dollar ringgit now making so much of ground compared to dollar, would there be any impact on your side? Is there any currency risk per se?
Not really. I mean, our currency risk is limited, not so extensive.
I see.
We don't have currency risk in the transaction part of the business, because we always collect and settle in the domestic currency. Where if the US dollar does go up a little bit, it will impact the prices of terminals that we buy. But this is an industry-wide thing. It's not just for us, because all prices will go up.
Our technology revamp may also be impacted, because if we need to buy something or another for a technology from a US technology provider, that will be impacted. But again, it's very limited.
Okay, I would like to keep the timing intact, which is we are scheduled to end, I think, about 11 o'clock, the presentation. But I would like to ask, beyond ASEAN, is there any plan beyond ASEAN, given that 5G is actually going to be fully take off by 2024, 2025? Any plan for beyond ASEAN shores?
I think the answer is no. We have our hands full in ASEAN by itself and the markets that we're in. I think there's a lot of opportunity, like I said, in Malaysia alone, even let alone the three or other markets that we operate in. So I think we are comfortable where we are, meaning we know the markets well. We need to capture more of the opportunity in the markets we are in. So going into new markets where we don't know the markets well, or we're going to essentially be a bit risking a bit more at this point in time is not warranted. Like I said, when it comes to payment transaction processing, 70% of the transactions in ASEAN are still cash-based. We need to focus on how we can migrate those transactions from cash to digital, and not only us, but all of our competitors will be winners if we're successful in doing that. So I think we'll stay put where we are and try and focus in the four markets that we're in, and make a better effort at digitizing these markets.
The hot commodity, Sean, of late, or is going to be the case for the next, I think, as long as we remain in the market. Can you shed the light on your ESG initiative so that the market can be informed of that?
Absolutely. So, we're proud as a small company. We have focused quite extensively on ESG over the last 12, 18 months. We are a member of the CEO Action Network in Malaysia, and we work very closely with industry leaders in trying to address in our own way some of the challenges, whether it's with the environmental aspect or the social aspects, and regulatory and governance aspect of things. So I'm pleased to report when it comes to we've actually for the first time published our own ESG last year, our own ESG addendum in our annual report. So we will continue to report on our progress. In terms of social aspect, we're very mindful of what our mission is in the countries that we work, and what our responsibilities are to our employees and to their families and to the communities we live in. Environmentally, for the very first time, actually, I think in GHL's history, last year we went ahead and installed, for example, solar panels across our headquarters on the rooftop, and we're pleased to say our data center here is running partially now on solar, and we're doing our little bit to help with the efforts, and we're being very transparent about our effort. And again, as a member of CAN, we've also signed up for the areas where we think as a company we can make a difference, and on the ESG front. So we're quite excited, and we'll continue to report on it very transparently, and not just be doing gaslighting, but actually doing and making and accomplishing a change. So that's what we're really excited about. We're looking at couple of other initiatives, hopefully in 2023, whereby we can make some of our terminals environmentally friendly. And we certainly look at all the vendors that we work with and all that to make sure they themselves have very strict environmental policies and so forth. So exciting times, and you're sure to hear more about what we're doing on the ESG front in this year.
Rosnali, we have recently been admitted into the FTSE4Good Index. So that's also an acknowledgement of our efforts to improve our sustainability in ESG.
That's a very good, what they call, optics for the stocks, given that you are very transparent in your ESG framework. That is what we want to see. And of course, solar panel, for all the companies that we, what they call, inquire, solar panel is one of the small steps to a
Absolutely.
sustainable environment. So it's nice to see. But okay, one question for me. Indonesian reported the strongest economy in 9 years, and I think the President Jokowi rating is the highest he has ever seen. So I think going into Indonesia would give you a lower risk compared to others in the region. Is there any plan to actually put more eggs in Indonesia?
Yeah, there is more plan to focus on Indonesia and figure out a way for our business to scale up in Indonesia. I'm not sure how that will happen. I mean, there's challenges from a regulatory standpoint to go in to Indonesia. But like I said, I think we need to figure out the best way for GHL to scale up. Our business is economies of scale business, and we need to build scale in Indonesia. And how we do that, it's something that we haven't solved for yet, frankly.
Any hint on your fourth quarter numbers, or when will be your results coming up?
No hint. Stand by, and you'll see shortly.
Shortly. When, Dennis? The announcement?
23rd.
Oh, 23rd. 23rd is on a Thursday.
Mm.
Will there be any analyst briefing?
Yeah, we will send out the invite when we finalize the date for the briefing.
Okay. All right. It's good turnout today. We have for the corporate day, short and sweet, straight to the point. We want to see what actually the prospect is for GHS system, given the advent of digitalization, e-commerce, e-payment, and we heard from the man himself, Mr. Sean on and also Dennis on what to expect for GHS system. Afifa, is there any more question from your side? Or anything from the floor before we call it a day for our corporate day? Afifa, anything?
No,
No?
I think yeah.
Hanafi, is there anything? Okay, if we have, Dennis, we will, email you, and Afifa will contact you. Can you share with us your presentation slides so that we can form our view for our the valuation for your stocks? As mentioned, Afifa has a buy call on a GHS system. I think $1.15. This is slightly way off compared to your 52-week high of, I think, about more than 150. We think there could be some leg up on this. However, let's wait for the fourth quarter number. Sean, thank you for participating, perhaps all the way from US, is it?
No, I'm here in KL actually. So
I see, here in KL. Dennis,
I'm
thank you
based
so
in
much.
KL, yes.
Yeah, Dennis, thank you so much for being so cooperative, so very, very good, all the way. Sean, just take note that Dennis has been very, very kind to us all the way until today, and she has been very kind to Afifa as well, sharing all the numbers. I think he's a very experienced analyst himself. Other than that, thank you so much for joining us. We will have our corporate day coming up in March and also in April, and we will send out the invite for everyone. Sean, thank you. Dennis, thank you. Have a great week ahead, everyone. Thank you so much.
Thanks a lot. Bye-bye.
Thank you.
Thank you.